in partnership with CommSec.
Well, there's a big focus on a lot of numbers, including the price of oil today as a result of the increased tensions out of Iran. Joining us from CommSec is Tom Piotrowski. So what's the read this morning, Tom?
Pete, it's a difficult one in that we're waiting pensively to see some prices open up so we can gauge the way that the markets might respond. So the earliest indication we have is the performance of the Aussie dollar. So bearing in mind that on Friday it closed closer to 64.9 US cents, and in the first moments of regional trade we've seen it trade around 64.5 to begin with. Quickly moved down to 64.3, and it's trading around 64.25. So there is a clear confirmation there that investors will be seeking out safe havens to the greatest extent possible. So that will include gold prices, government bonds, the traditional ones. The move into the US dollar under these circumstances seems to be a very likely outcome. So that's the bottom line, that investors, having seen such a seismic event at the weekend, will be just waiting to see how the geopolitics pan out. Oil prices, as you rightly pointed out, Pete, are very much in focus. The choke point in the Straits of Hormuz is really the area that many energy analysts will be paying very close attention to over the course of the coming days. Of course, you see up to about a quarter of the global seaborn energy traffic go through that choke point, so it can have a very swift impact on things if you start seeing military activity around that point. So you would imagine stocks will be well in negative territory today. Over all the futures on Saturday morning in local time finished down by a little less than 0.25% as far as the SPI is concerned, but you would expect that sellers would push into that space in the early part of our session this morning.
Okay, we'll be watching that and talk to you in a few hours. Tom, thank you.